So now you have understood the market profile. In the previous series you understood the volume profile, and now we are going to combine them both through business zones. I'm going to provide the business zones in the Discord chat, I think for 2 months, so you can create them for yourself and then compare them. Then at some point, at least in those 2 months, you will master them as good, so you can create them for your own, because those are also going to be the zones you will have most trust, and you will always analyze the context. If you just implement the zones, the likelihood of you checking the context of the asset or the market is going to be different. So we will go through some examples, and I will explain you our logic and the process behind creating business zones and combining the volume profile and the market profile. So we most of the time have charts like this, and we have different charts in this presentation because we want to tell you it doesn't matter which software you use. We use Sierra Chart because you can implement a lot of that, but also me personally, I started to learn with Sierra Chart, but now I moved away. For example, trading views, integrating more and more market profile. I don't use footprint and order flow that much anymore because I adapt strategies to my personal needs. And I want to go more into swing trading, so I don't need that anymore that much. If you want to go more into swing trading, day trading, very short-term trading, then you need this. And if you want to really master the strategy or the things we teach you, I would implement to replicate the setup, but you don't need to replicate it exactly. The chart does not need to look the exact same. You don't need to use the exact same setup. It's about the information that is provided and the usability for you. So, basic explanation. We have an opening price of the market profile. We have the initial balance. We have the closing price. And the purple thing is the midpoint of the market profile. We haven't taught you anything about that yet in the course, but it's also not that important. Just one team member of us likes to have it displayed, so it is in there. We have value area highs, we have value area lows, and we have VPOCs. So those are all based on volume. The lighter the color of the market profile is, the more earlier in the session you view. Can be weekly profile, can be daily profile, just for easy of language or easy of understanding. For ease of understanding, I will use the previous daily profile, so we just assume all of those are daily profiles, but we excluded price, we excluded XS3 because it does not matter. So we have value areas, and at first we analyze the context. So are they rising, are they falling? They have been rising in generally in this case. Then there was a big gap, most likely FOMC meeting, I don't know, some fundamentals, and then we continue to have rising value areas. So this one's higher, that one's higher than the previous one, the POC is rising, we have a weak high, we have a strong low, and furthermore, rising, weak high, we take out this high yesterday, the value areas are starting to overlap, and the opening price has been very low, so we had a big gap, but we closed that gap, we accepted the previous balance, we took out the high, and then we closed below here. So we have an uptrend, or maybe most likely the trend is something like this. So we are at a kind of indecisive mood or state. We have a strong low, we have a strong high, but the low is way stronger than the high. Now we start to create business zones, because those business zones are our areas of interest. Of course, we can just start to trade the volume profile if we open in between. Check for shorts here, we check for longs here. If we break out, we look for continuation. If we open below, we check for shorts. If we open above, we check for longs. And we can check this just with the value areas, but it's going to be more easy if we have kind of a support and resistance zone and not just one price level, because with the value area you only have one price level. So we use business zones, and with the business zones we always take the value area high and we take the value area low. And then we look for the next interesting point to the downside from the value area low and to the upside from the value area high. And please now make a screenshot and try to create one business zone and just draw the price level where you think the business zone is connected to the upside and to the downside. This was now just an example. Please create one to the upside, to the downside, to the naked value areas, but in this case just the upper one and the lower one of yesterday. and then I will give you the solution in the next chart. So, to the upside, we have a tail here and we have a decline in volume. So this is our next interesting level. So we have this area, or this business zone, and this is our tradable interest. So if we are below, we check for shorts here and put our stop at least above here. You can also extend it depending on the market phase, but here it makes sense to put it directly above the business zone. To the downside, we took this low volume area. So you see there's a low TPO area, so of the market profile, but also in the volume there is a low area. So this is our business zone. And as long as we are in between those business zones, we try to look for trades, maybe for Bs and continuation patterns on the top, or for Ps where we had a breakout and a break in, so we can continue to trade them short, and the opposite side on the downside. But those are our areas of interest. If we are above them and we accept them, we can look for long trades on here. First take profit definitely is going to be the naked POC here, maybe partial at the value area, but depending on how the profile here looks like. If it's a D profile, the likelihood of you taking a first exit here, but then the risk to reward's not going to be that good, is high. If it's a P profile, the likelihood of you or us reaching the POC again is higher, but you will experience that with some time in front of the charts, which is necessary always. So in the following, we'll go through a couple of more examples, but after we created those zones, so we create those zones in those charts, and then we overlay or implement them in a basic chart. Those charts are based on the session profile, so where's the highest volume of the asset. So we focus on that session, even with the opening price and with the closing price. And then on the charts, when we look at the charts, we have 24 hours or as much data as there is provided. Not all the charts have, most of the markets have an exit or no data, or they closed maybe for an hour or two at night. So that's why there is a difference between the chart and the business zones. But if we are below and we're opening below, we most likely continue to look for short trades. If we open inside, we play balance. If we accept the prices above, we will look for long trades. If we break back in, accept it, we look for short trades. That is the logic behind our business zones, and that's the way we use them. Yes, you can use them just with, you could use the same principle just with the value areas, but with business zones, you can have better entries. So if you combine it with the dynamic setups, for example, you can find very good entries and perfect stop losses. So you can tie in your stop losses, and you also have the possibility to just enter short here, limit. So you don't check for setups, you just enter short limit and put your stop loss one tick above the business zone high. And if we have a close inside the value area, you buy limit here, you put the stop one tick below. You're going to have a lot of stop losses, but in between there are going to be very big profits because you have very tight stop loss. So your hit rate is going to be low, but your take profits or chance of winning, or your profits in general, are going to be big. So when you combine it with setups, your hit rate is going to be higher, but you will have less trades. If you just trade with one tick above, one tick below, you will have a lot of trades, but a very low hit rate. Example number 2, again, take a screenshot, try to create the business zones, and then I will show you the business zones that we created in this example. So, as you can see, as always, volume area high and volume area low. We have a POC, we are in a rising market. We had a fucking big gap. We have the opening price. Down there, we have the initial balance and we have the closing price at the high of the value area of yesterday. So we create the business zones. It is most likely that we will open up here or there on the following day, and either we look for continuation trades or balance days, but there I would prefer the trades on the bottom because in general we are in an uptrend and there I prefer long trades. We have strong low, although there's really much volume traded, which is kind of an anomaly. kind of a sign of weakness. We'd like that volume to be traded on top. It would be an even stronger sign. But those are the business zones. I hope your business zones look kind of the same. In this case, when the value area high is pretty close to the extreme, and the extreme is not a ledge, so it is one TPO and not a couple of TPOs. You can also connect the value area high just to the extreme of the sessions range. And again, then we have those zones on our chart, and this is the chart we trade off. This also, if you check at the chart, looks like a continuation, but you can again see on the extremes or on the low volume areas, we have mountains, and we have low volume areas, and we check for trades kind of in the low volume areas and not in the high volume areas. So let us continue with another example. So we have falling value areas. We have some merged profiles. So when profiles overlap, so either they are totally inside the range of the previous profile, or they overlap to 70-80% and the close is in the previous profile, then we merge them. Because most of the time we have one balance, and in this balance it's better if you have a couple of balanced profiles. Now this one's ugly. Let me recreate it. If we have a couple of profiles and they overlap a lot, and we want to, and they create a range, and we want to prepare for this day that is following, we don't only want to take the value area high and low of the previous day, we want to take the value areas of all those profiles together. So we merge them, you can just put them together into one big profile. So you have value area high of the balance and the value area low. This just happens when there is balance, when there's trend, the overlap. There is not going to be an overlap and less likely to be a close in the previous day value area or a fair accepted price. So most of the time when we merge profiles, we have D profiles, but they are shifted. So this profile, for example, is shifted to the downside. The POC is in the lower part, the VPOC is in the lower part, and the bell curve is kindly slightly shifted to the downside. But we prepare for the day that's following here. So we have this value area high, we have this value area low. Now please create some business zones. Screenshot business zones, mark your levels of interest where you withdraw or extend the business zone to. This is our solution. So on the high, I think it's pretty obvious. We have a low volume area here. We have a decline. The market spent less time here, so we just take our business zone here. So this is our area of interest. If we are above that area of interest, we will look for long trades. Below, we will check for short trades. On the downside, of course, we could extend the whole business zone to this whole volume area, but then the business zone is going to be too big. If you adapt your trading style to a style where you say, I want higher hit rates and less trades and less risk, or a worse risk to reward, because this suits more your personality, this is of course no problem. You can adapt this, but at first the way we do it is you need to adapt this to you individually. So this is not the solution one fits all. It's still going to work because the logic behind this is still based on supply and demand. It's still on where are the big players accepting prices, how big you create those business zones in the end. It's depending on you. We just explained you the way we do it. If you want to do it the same, try to study it and try to implement it the same if it fits your personality. So we just took the area where the volume was declining a lot. Because yes, here the market maybe spent some more time, but no real volume was created. And the fundament of our logic is the volume. We use the market profile in addition to recognize the strength. And in this case, we have a first sign strengthening profile. I don't know if they are on the same level. No, they're not. So the lows taken out, but we have still accepted a lot of volume down there. Kind of a strong high. We've opened here. This is mid-range. We close in the value. Difficult profile for the next day, but if we open in between, basic scenario is short on the top, long on the bottom, continuation short, or continuation long. So again, those zones are implemented on the chart. Chart, you have more data. So this is the session close like. And if we're in between, you can also see it here on the side. It's like the merging of all the profiles, at least the volume profiles. Either we trade this balance, sometimes we take out the high, then we go back in, we short. It is the same logic. It is not really complicated. It's just studying and exercising. So, another example. The TPO sizes vary, by the way, because the volatility of the markets vary, and you can adapt the TPO size, so how many ticks or points are one TPO in the settings of your software. But what do we have in this case? We have a weak high, we have a naked POC on top, we have a weak low. In general, we have falling value areas. A value area high here, we have the value area low here, and we have an interesting combination because we have a weak low and a very low value area low that is very close. I'm going to close into the value in the value area of yesterday. So take a screenshot, create the business zones. I'll give you the solution now. On the top side, there is no real very interesting level of market profile declining or rising or volume profile, but we have the opening price. So opening price also an interesting level, and on the previous day we had a strong decline here. So in the combination of the previous day, so 2 days ago, decline in time spent here, although there's no big decline in volume. The opening price, we just create this business zone, but this business zone is interesting business zone, but there are stronger ones. On the downside, I think in this example, it's way more interesting because we have a weak low. And as I said, when we have a value area close to the extreme or absolute point of a range, we sometimes connect it with the high or the low of the absolute range. But in this case, because we have a weak low, the likelihood of this low getting taken out is very high. We don't want to enter when we have a breakout already below this low. So we look for an interesting point above, and then we have a volume accumulation over here. So we just check for when does the volume rise, where's the value area of this high volume area, and connect the business zone with that. And then again, implement them into the candlestick chart. So you can also see in the chart, we have a weak low here, we have kind of a weak high here. So as long as we stay in between here, we will look for shorts, but you can see also there's some volume extension over here. So sometimes you will go above and then break back in. Or it will even take out that weak high, and then the market's going to slow down. You see the order book slowing down, you see dynamic setups, you see a strong high or a finished auction, we come down. And then if you have a scenario like this, you can look for aggressive shorts, but the best confirmation will always be that we are below our business zone, and then you can short. You can take partial profits over here on this side, but the likelihood then of continuing, maybe there's a pullback to the POC, of continuing down below here because there's a weak low is high. So I think we have 2 more examples. So again, screenshot, exercise, I will give you the solution on the next one. Overall, falling value areas. We have a merge profile, we have a D profile, a balance profile, shifted to the downside because the POC is on the lower side. We have opened in the previous day value area. We have closed below previous day value area. The value area of today shifted to the low side. We have a very weak low, strong high, we have a strong high, kind of a weak high. This looks like a market correction, but for now we are still weak, because there's no overlay in value areas and we have weak lows. So the balance area and the POC is very low. We have the value area high, which is also a very high volume area. What is the most interesting point above? You could say above here, but then the business zone would be too big, and the risk to reward ratio is not good anymore. And because we have some merged profiles before that, we have a very strong decline in volume. So You see the decline in volume and also in time spent here. So we combine the value area high, where also the close of the previous day is, with that interesting level, because that one's just going to be too big. On the downside, interesting combination, because again, the value area is very close to the extreme, but we have a weak low. We don't want to connect it with the weak low or the weak high, but in this case the weak low. So we look for an interesting point above. We have a high volume area. Yes, we can connect it with a VPOC, but business zone is going to be too big. If you prefer less risk to reward, higher hit rate, then you can increase the business zones. But depends on the trading style you prefer. And then just connect it with a high volume area, but not the whole high volume area, just like with the beginning. Then again, we implement it on the charts. So we have the closing price, I think it was somewhere here. Yes, it was below the midpoint area. So we have a balance phase above. Inside, inside we will continue to trade. Balance above, we try to continue. I think I'm gonna get sick. I feel like I'm gonna get sick. Above, we will look for continuation trades, and below, if we have acceptance, we look for pullbacks and look for short trades. We have a weak low. If we have acceptance below here, we have a B set up. What do? We look for a fake out to the upside, continuation, break into the B, and check for take profits to the downside. First take profit can be weak low or POCs, all naked value areas of the past. Very simple. I think it's going to get very, very repetitive at some point. Last example, I think. The TPOs again vary because this is a less volatile market. I think it's maybe Eurobond future. Maybe the bubble, I don't know. But it does not matter. Any market, but obviously less volatile. We have less TPOs. You can also increase the TPOs or the size of the TPOs if the volatility is going to get too high and you have too many TPOs and too much information and you want to reduce it, just increase the TPOs. Same is for the volume profile. Again, we have falling value areas. They are in general downtrend. I think there's no discussion about that. And we have a weak low on the extreme. Today we made a strong low. We opened above the previous value area. This is the POC and the value area most likely in one level. We have a higher value area first time, closes kind of strong. We have a very, very weak high. And we have the midpoint, but it doesn't matter, it's just in the chart. So, sorry, I'm drawing too much in the chart. Take a screenshot and create a business zone. And 1, 2, 3, here's the solution, or our solution. We are in general uptrend. We have first signs of strengthening. We have a very weak high. So the likelihood of this getting taken out is high. On the value area high, we have this decline in volume and we have the connection of the close. So the close of the main session was in this area. And we also have a strong border here. So we take this as the connection point from the value area to the top. On the bottom, we have the value area, and then we just have a weak low from 2 days ago, and we have kind of this strong mountain accepting here again. And as our logic is, when we accept balance, which here is kind of balance because a lot of people trade it here, we don't want to connect it with that balance because then the business zone would be a balance itself, and then the likelihood of the market accepting the balance, the business zone, would be high, and we don't want it because we look for long trades above the business zone and short trades below. And when we create a balanced market in the business zone, then we're gonna get a lot of stop outs because then we're gonna create balance in the business zone and we don't want this. So we connected with the low volume area before this high volume area. And on the downside, again, we have the value area high, and then we have a decline in volume, and we have a closing price, and we have the opening price here as well. So this can be an interesting level as well, where no acceptance will be, but below we will fill up this space Here we have kind of a low volume area. So we will trade through this most likely fast. If we accept above here, we will trade in this direction fast, but also in this direction fast. And here again, we have a balance, so we trade in between here. And above here, most likely we will not be that fast again, because we already have a balance here, and we will take out that high, depending on where we open. So we implement this again in charts. So we have our charts, and we can trade through those charts. If we close below here, we will look for shorts. We can check for longs over here, but I like it more if it's like taken out and then coming, so break out and then back break in. We have a weak low, most likely this is going to be a weak high as well. So if we trade to the upside, can be also a very nice trade. To check for long down here and then don't get out here, speculate on more acceptance and trend continuation or short-term trend continuation. So I think we now have enough examples and my brain is dying. So please continue to the proficiency test where we provided some questions and then continue to series 600.